very good evening, ladies and gentlemen. Thank you so much for tuning into Smart 24 TV. We are at Plot 42 Nile Avenue, Kampala, from where we hail to drive business. And this is Financial Markets. My name is Anthony Sebale, your host. Make sure you get to follow me on X and as well as other social media platforms at Anthony Sebale. You'll be able to get the content as it comes. Remember also to follow Smart 24 TV at Smart 24 TV now on X. And also you can watch us live on YouTube at Smart 24 TV Live. That is our YouTube channel for all your mainstream media for business here in Kampala. Now, we have a lot of exciting shows, and especially now that it is indeed a very great time for investment. We are already into the third quarter of the year. The year is really moving fast, yeah, and we should be positioning ourselves for the end of the year. You should be ending the year very strong, especially in terms of your investment portfolio, you know, your diversification. Have you checked, you know, your risk assessment and see how am I being able to make money off of my savings? This is what this show is all about, making money off of your savings so you can have that passive income coming in and so you can grow your wealth. Now, the financial markets, of course, cannot exist without the stock market, and for a while the stock market in Uganda has been growing with new listings, and especially in the telecommunications sector. We've seen two mega companies, that is Airtel and MTN, list their shares on the Uganda Stock Exchange. However, one of the challenges that still are posed to this exchange is the dominance of what we call institutional investors. Institutional investors are basically investors that are investing on behalf of institutions, and these usually come into the market with very big money. An example is NSSF. NSSF is one of the biggest investors in the East African stock market. It not only invests in Ugandan stocks, but stocks all over Kenya, in Nairobi, as well as on the Dar es Salaam Stock Exchange. Now, retail investors sometimes feel crowded out by the institutional investors because they have very little liquidity. When you come to the market, most of these institutional investors really hold on to their stock for a long time. However, still, regardless of that, many retail investors have been able to leverage opportunities in the stock market trade and have been able to make some money. So tonight, joining me on set is none other than a gentleman who is very well known on this show. He has been here before, and we have always had very exciting conversations. Mr. John Were, who is the Relations Officer at the Uganda Securities Exchange. You're most welcome, sir.
Yeah, thank you, Anthony. Happy to be here again. Like you've rightly said, I've been here before, and it's always an opportunity to always come back home, given the previous engagements we have had and how much Smart 24 has been driving business around the capital markets, around the stock market activities. I feel honored to be here, and I feel correctly to say Smart 24 is home.
Wow, amazing. I don't know if I should say Happy New Year, Happy New Quarter, but I think we shall see as we proceed. But tell us about what's the status quo of affairs at the exchange. What is happening currently at the exchange? What are you up to?
So, thank you. So, lately, we've had several companies hold their AGMs. Basically, AGMs are annual general meetings, and these happen once a year in terms of the AGMs. It's an opportunity for investors, me and you and everybody else, whether institutional or retail, to participate in these meetings, be able to participate in decision making, be able to vote and make their voices be heard. It's also an opportunity when investors get to hear from management, get to receive reports, get to give their opinions in terms of how the company is being run. So I've been through a busy season with several AGMs happening, and as we talk, we are pushing on with 2024. Let's see what the company is reporting as results keep coming out every other day.
Well, how important are these annual general meetings, especially to retail investors? Because I see some of them happen behind closed doors, others are open, but most of them are usually, you know, on invitation. Not everyone attends the annual general meeting. So how important are these annual general meetings, especially to the retail investor?
Okay, for the start, an annual general meeting can be held physical, or had several being held physical. I've also had the companies choosing to hold annual general meetings in terms of hybrid, that's the physical and the online presence for the shareholders to be able to participate. So it's not necessary that certain investors are restricted from attending, but however, there may be a number of those attending physically and then others attending online.
Okay.
So whether online or attending in person, the practice is they all have an opportunity to be able to vote, either vote virtually or vote physically, and so on, or even raise questions to management for them to be able to answer some of their questions. But going back to the exact question of how important are these AGMs to retail investors, AGMs are very, very important because that's where the shareholders, whether retail or institutional, what they get to participate in decision making in terms of the company.
Yeah.
As we all know, shareholders don't participate in the everyday running of the company. Management does that on behalf of the owners, in this case on behalf of the shareholders.
Yeah.
So this opportunity just happens once, and when it happens, it's important for retail investors, whether institutional, to attend, because what they get to choose the direction which is what they get to choose the direction that the company should take.
Yeah.
Like for instance, voting in terms of the board members, if there are new ones proposed, in terms of their approval, getting to vote on issues such as whether the company gives dividends that particular financial year or not, in terms of also approving the financial reports before them. That is if they pass a resolution to approve those financial statements before them.
Yeah.
So basically, AGMs are not just a formality, but they are a key management practice that any investor should be able to pay attention to. And also the thoughts delivered in there are very important for me as a potential investor when I'm making a decision in terms of whether to participate in a certain stock or not to participate, because there's a lot of information shared in there.
Surely. And I think every investor has a mandate to be able to listen to what their investments are doing. And so AGMs are very, very important.
Yeah, true.
Now, diving into our discussion today, when you look at, I'm looking at the quarterly bulletin from CMA for the first quarter. I think the second quarter hasn't been released, but total market capitalization in the USE decreased by 10.5% to 17.7 trillion. And on annualized basis, the market capitalization dropped also by 10.5%. But looking at the activity, when you look at the turnover, there was an increase, a slight increase in the turnover, which is a very good indicator of performance in the first quarter. Of course, a lot could have changed in the second quarter. We shall see about that. But then let's look at retail investing. First of all, for a basic viewer out there who doesn't understand anything to do with investment, who is a retail investor and how do retail investors enter the market?
So basically, like you earlier noted when we were starting, we have the institutional investors. So these are basically institutions, as the word goes.
Yeah.
And then of course we have the editorial investors. So investors, those tend to speak to people like me and you and everybody else watching us in there. So it's, and how they participate, there are several ways that they can participate in this, in the stock market, okay? And of course, one of the ways of participating is basically to make sure they have an SCD account,
Okay.
because without an SCD account, one would not be able to participate. And of course, not just having an SCD account, but like any other stock market, be able to participate, a retail investor would need to have a stockbroker, in this case the market participant, that gives them financial advisory and also facilitates the process of them joining the market and also participating, whether they want to make a sell position or to be able to make a buy position in the market. But basically, having an SCD account, having a stockbroker, those are key aspects in terms of anybody, in terms of any retail investor that's looking at participating in the stock market.
Yeah.
Maybe the other I need to hint on, as we earlier on noted, we will try as much as possible to speak to our viewers in the simplest words possible, trying to throw away the technical jargons just to make sure our message.
And you're the best person. That's why I invited you here, and I know you're the best person to do that today. Now, looking at the potential benefits, how do retail investors reap from these investments. I'm just taking an example. For example, MTN's, when you look at MTN, it has been issuing all these dividends, interim dividends and dividends for the first quarter, second quarter. But when you look at NSSF, the share NSSF is taking, it is in billions, right? And then, of course, some few investors, those renowned Charles Mille, they take home like 5.5 billion worth of dividends. And I believe, I don't know if Charles Mille can be put in a bracket of a retail investor, but I think he is, because it's not an institution, right? So, are there opportunities similar to this for our retail investor? These people who are investing 25,000, 20,000, 50,000?
Okay, Anthony, there's a very big opportunity for any investor, whether institutional or retail. When it comes to dividends that you earlier on referred to, what matters most is the earnings per share.
Okay.
So when the earnings per share, for instance, if it's 29 shillings per share, what that means is that a retail investor is earning 29 shillings per every share they hold. And also an institutional investor is also earning 29 shillings for every share that they hold. So which means the rate at which they get the benefits is actually the same, which cuts across in terms of the earnings per share.
Okay.
But the only thing is, in terms of media, what we get to hear, what we get to see on TV is the institutional investors like NSSF receiving their checks, but that doesn't mean even the individual investors, the retail investors like me and you, are not receiving their dividends. The only thing is they don't have the opportunity to attract your camera in terms of you paying attention to them, but that doesn't mean they are not benefiting from the market. And also what I need to emphasize is, referring again the earnings per share, is that all of them, whether individual or institutional, they all benefit from the market. But what could make a difference for you to see one getting dividends of say 5 billion or 500 million, and then maybe Johnny getting dividends or Peter getting dividends of
4,000
or 4,000 or 40,000
Yes.
or 3,000. It's basically depends on the volume of shares that they hold. But otherwise, all of them get at the same stand in terms of the earnings per number of shares, earnings per shares that they hold in the stock.
A dividend and an earning per share, I don't know if there's any difference, because I see EPs on wherever the market, and you say, okay, this earning per share is this, earning per share is that, but then you see the dividend is different. How is that possible? Because these are some of the questions I get asked by people who watch this show. They tell me, okay, Anthony, you're talking about all these things, but Quality Chemicals on their 2023 annual general meeting, they declared a dividend of 1.5 shillings per share. And yet you're talking about an earnings per share of a much bigger figure. How different is this, and what should retail investors understand about these dividends and earnings per share?
So, thank you. So basically, every time financials of a company are out, you also see the total amount of dividends that they propose to give out to shareholders. There I'm talking about the aggregate amount of dividends. You might see 2 billion, you might see in terms of billion, whatever the amount, a huge amount. But then also, as a company, it's broken down into units, and these units are the shares. So basically, this amount in terms of total dividends, when you divide it to, by the total number of shares that make up the whole company. So in this case, I'll use an example I'm not so much good in terms of food.
What is it, chicken? What?
Okay. So basically, when it comes to a company, the whole company is made up by shares. In terms, let's use an example of pizza.
Yeah. Okay.
So in this case, these pizza pies, each of them is a unit. When you add them together, you get the whole. This smaller units.
Yeah.
So in terms of the company, it's made up by units, more small units called shares, because basically a share is a unit of ownership. So when we say, for instance, DFC or MTN, whichever company is going to give out say this and this billions in terms of total dividends, that means you get the very dividends that's giving out divided by total number of shares, the units that make up this whole company.
Yep.
So at the end of it all, the units that make up this whole company make up the company, they are the shares.
Yeah.
And then the EPS earnings per share is that each of these shareholder or each of this share of this company, how much is it earning out of the total dividends that were declared. So basically that's the difference. So as an investor or retail investor, you should be looking out to how much total dividends is the company giving out. But also more importantly, when you are looking at the financial report, also pay attention in terms of out of this huge figure I'm saying in the financial reports, how much is every share earning? That's the earnings per share. And of course, technically, you're able to know once you know the earnings per share based on number of shares you have.
And what I'm getting from here, you're not going to take away whatever you've earned from each share, but you're going to take away a dividend, which is different.
So basically, dividends.
Your share earned, for example, the company 29 shillings, but the dividend can be 20 shillings, right?
No, basically.
Per share.
So basically, the company you invested in earned dividends. Now, those very dividends, when they begin dividing them into the shareholders or into the shares that they floated on the market, that's when it begins. That's now the earnings per share. So there's a very small gap between the earnings per share and dividends. They more or less mean the same thing, but one gives you the whole in terms of total amount of dividends being given or declared by the company, and then the earnings per share, they give you the rate at which these dividends are being distributed across the various shareholders or across the different shares that are floated what the company has.
Amazing. Let's talk about how the retail investors can navigate these complexities in terms of gains and losses. Now, for example, you have an investor, they have 25,000 shillings, and they need to invest maybe, say, in a couple of stocks. They don't want to put in only one stock, But, they're all these are different prices and so on. How can they be able to position themselves in such a way that this 25,000, little as it is, can earn for them something? Because when you look at institutional investors, they invest big and they go mega, right?
Yeah.
But now we are looking at this small client, a normal businesswoman in Chikubu, on the streets of Kampala, selling bananas. She has her 25,000, but she wants to be able to invest for the future. How can they position themselves to be able to benefit even with their little money that they're investing?
Okay, thank you, Anthony. I think the first thing that this particular investor needs to do is to be able to seek financial advice from the right sources.
Now, when you talk about financial advice, isn't that including more money? Financial advisors usually need money.
No, not really, because at the end of it all, for the start, even to just have an SCD account, an account which will enable this to begin investing in the market, we will need to choose a broker, stockbroker, in terms of opening this account. So the financial advice I'm referring to is not about even going on the street to hunt for people to advise them. I'm actually referring to the various stockbrokers. They have an obligation to offer you as an investor, as a trade investor, to offer you financial advice from time to time. And that's the mistake that many investors make, is that many of them don't get financial advisors from the right people, and that can be so detrimental in terms of their gains in the market. So once that has been done, then they are able to know which company is performing in terms of, at the moment, which company is performing in terms of dividends, for instance, which company is performing in terms of the price appreciation, in terms of the price growing. Because at the end of it all, also as investors, retail or institutional, different investors have different investment goals and objectives for participating. I could be a total investor, but when the money I'm investing actually is I am looking at dividends. So if I'm looking at maximizing dividends, that means I'm able to speak to the stockbroker so that I am able to get the insights in terms of performance on dividends across different counters to inform me in terms of making a decision. Then you might find another total investor who is participating into the market, but basically looking at one thing: how do I support a stock to be able to invest, but in this case investing for price for price growth, price appreciation. So there are different objectives why all retail investors participate in the market. But also key to note that which we must appreciate here is stock markets are not as complicated as some make them to seem.
Yeah.
But the biggest challenge is the lack of information, the information gap, and that's why also they have to pick into anybody who is intending to play in this, to invest in the stock markets needs to pick interest in terms of the financial advisory services that are given, and also not just by the stockbrokers, but even if you look at our social media handles, their social media handles, you'll find a lot of you'll find conferences, you'll find virtual meetings, you'll find webinars.
Expresses.
Yes, you'll find expresses.
Yeah.
So picking interest in terms of those platforms to get sufficient information would be very helpful for anybody who is intending to invest in the market. Because without information, then one would end up finding the markets to be complicated. And just like any other thing, even if it was an examination and you never revise, you never seek right teachers to give you right information, I think it would be a miracle for you to get good grades without that.
Amazing. And that's, I can totally agree. The barrier of the knowledge gap has been a very huge step back, a chasm between the market and the potential investors. Those are the retail investors. Now we're going to take a quick break, but when we return, our population consists of 50. You saw the statistics from Uganda Bureau of Statistics. 50.1% are people below the age of 17. Just put that in perspective. That the biggest part of our population, more than half, they are less than 17 years. And now when you look at between 17 to 25, I'm pretty sure that's another 25 or 30%. So the big people, 25, 30 and above, are actually composing of about less than 20% of the entire population of Uganda. Now you're looking at, when you look at the general statistics of people investing, even with collective investment schemes, their age brackets usually don't fall in that, meaning their market has not been tapped into. And this is the biggest number. Why? Because they're probably in school, they're probably on the streets hustling, they don't have this knowledge. How can we help them? When we return, ladies and gentlemen, we are with Mr. John Werry, and we are discussing opportunities, unlocking opportunities for retail investors in the stock market. My name is Anthony. We return shortly after this quick break.
Smart 24, driving business.
I am Muriel Jamila Hope, a student of Ebenezer Baptist Secondary School, a senior 4 candidate in Obongi District, Itula Sub-County, Dongo Village. And I am in the bakery class, currently studying, pursuing the course of bakery in Lira City. But why have I come here is to add more value, to add more knowledge on the skills that I have. Because when I came here, the skills that I have got is on the best ingredients that I can use to actually make good products. But our great congratulations to the government of Uganda, His Excellency Yoweri Kaguta Museveni. He's really a someone who is a mentor to everybody. He's really someone who is nationalistic, who is patriotic. We appreciate his duty towards our country, towards our women, so as we develop our economy. My congratulations to Grow Project and Nuibis Foundation. We appreciate their efforts. They shouldn't regret their funding, their investment in women in such a vocational training, because it's for the betterment of our economy and to have a great future for the future generation.
Grow, generating growth opportunities and productivity for women enterprises.
Smart 24, driving business. Smart 24, driving business.
Ladies and gentlemen, this is Financial Markets. My name is Anthony Sebali. Now, we are with Mr. Were. We are discussing how we can unlock the potential of retail investors, and especially by supporting investment opportunities in the stock market in particular. Now, A recent statistic from the Uganda Bureau of Statistics showed that 50.1% of us in Uganda, that is of the 45 million people, are young people aged between 0 to 17 years. That means that majority or more than half of this population is composed of young, not even youth, but young people. And let alone looking at statistics for people between 17 and 25, that's another 25%, making it 75% for that age bracket. Now, with the Uganda Securities Exchange, Mr. Were, how can we leverage opportunities of investment for these young people? Because at the end of the day, you and Charles Mbire and all these big people, you're going out of the market. But who are you leaving behind? And all this knowledge that we are sharing, the financial awareness, has it been tailored for these young people to appreciate? How can we help them?
Okay, thank you. It's very important that we pay attention to the younger people, given the statistics that you have earlier on referred to. And it's not just about the statistics, but also when you look around, even by your own self, without looking at those numbers, if you walk around, you'll see that really the younger people are the majority, and there's no way we can exclude them, and we think we are going to go to the next level in terms of growing capital markets. But also, like you have earlier on noted, we need to speak to them in a language that they understand, and these are things that the Uganda Securities Exchange and the other market players are up to. Just Saturday last week, we were at Kampala Parent School in the primary schools swimming gala, where there were thousands of people, especially the hundreds of young participating in the swimming. And for us, the ideal at USE is we want to build a mindset of building generational wealth within the younger people, and also encourage, educate parents, also pass this very information to the younger people. But away from that, in the past, you have seen us organize the University Challenge, which will have the other episode coming up very soon. Okay. It's also in the intention of giving these younger people an opportunity in terms of a practical space where they can buy the shares, invest in government securities practically, and be able to grow their stocks, grow their investments in the virtual space. Because once they master doing it in the virtual space, then you can be sure they can now do it in the real world. We have reached out to academic institutions in terms of giving guest lectures to these learners. Okay. And for us, why we are doing this again is to demonstrate that there are opportunities within the stock market that they can take advantage of, but also to be able to stretch their mind in terms of the mindset building towards the stock market, because you can't expect them to take up an idea which they've never heard about. But also in terms of the younger people, these are very good participants when it comes to social media. So I've also been very intentional taking this message where they are. I'll tell you, we run adverts in terms of Google Ads, placing them in platforms which younger people are fond of searching, are fond of engaging, and that's the very reason why if you check out, you'll find USE having a TikTok account, having a WhatsApp channel, and among other options. All this is intended especially to reach out to retail investors, but more importantly to be able to reach out to the younger people. Gen Z. Yes, they are like they prefer to refer to themselves lately by the I wonder. I'm still one of them, or but anyway, all in all, it is something that Uganda Securities Exchange were very intentional about, and we have seen this very mindset go across our different market participants, like the stockbrokers. We can not afford to just sit and neglect the majority when those are the market of today and the market of tomorrow, who are going to be sitting, heading organizations and making financial decisions. I'm
glad you mentioned TikTok, because at least when you look at the hours the young people spend on TikTok scrolling here and there are probably more hours than they spend on any other social media platform. And when I saw that video of you at Kampala Parents, I was really happy. I was delighted, and I saw that now you're getting in touch, with some of the populations that we actually need, the demographic that we need to address. But however, also the challenge with the young people, you have very small attention spans. You know, you can't hold them there for a whole 1 hour or 30 minutes discussion without them being bored. You know.
Yeah.
So, in terms of technology, how are they going to be able to, play safely? You know, increasing accessibility and also efficiency in terms of accessing the market using technology. Because I've seen, for example, there's one fund manager I know who has made the whole collective investment scheme idea so appreciable. When you look at how they present it on social media, you know, the pie charts, he makes them into very, small memes. You know, they're easy to understand by young people. And the Gen Zs, by the way, I think I am one, because I think we start from 99. Yeah, and yes, that's when I was born. So we are more interested in a funny way of presenting things, not the usual, files and reports, financial statements. How are you addressing this in terms of the technology as well as increasing accessibility to the market?
Yeah, thank you. So in terms of increasing accessibility to the market, the younger people and everybody else, they are really people they are technology tech people. That's me and you agree on that. So in terms of investing in the market from wherever they are based, they can now participate in the market, even open an account or be able to participate in the market in terms of view their holdings and from wherever they are by simply using the USSD platforms. If they are having MTN line, by simply dialing *165*65 hash, it will take them to a platform where they're able to open accounts and be able to participate in the market.
Okay.
That's also very deliberate. If they are having Airtel, basically it's a matter of dialing *185*85 hash, and just by a few buttons they are already into the market.
Yeah.
Like you said, these are people with quite low attention span, but very much interested in this kind of investment platform. But away from that, if you check out on Google Play Store, you'll find that we have an app called Easy Portal. Again, these are hip hop applications.
Yeah.
I think the greatest app or application the young hip hop appreciate it is in terms of I beg your pardon. So basically, when it comes to technology, young hip appreciate applications a lot. So again, we've gone beyond just the website in terms of desktop or computers to be able to put this information on apps where they can be able to access it much more easily. But even away from that, through the Easy Portal platform, that's www.scd.usd.or.ug, you'll find that they are able to log into the website, that's Easy Portal, and still be able to access the market. But again, not just that, we earlier on noted in terms of our heavy social media presence. Every week you'll find that we send out bulk emails every Friday to be able to the general public to be able to get this information. But also note that you see us running sign engagements, just like my being here today is part of making sure these younger hip and everybody else, they're able to get the information they need to be able to participate in the market. If you checked out our social media handles, they are very active. Again, we put the information there. Besides the mainstream media, traditional media, also our younger people like the social media platforms more. So we are very intentional. That's why we are able to share the kind of information every other time, just to make sure they are able to participate. But away from that, we are now going to where they are in terms of their institutions, in terms of religious institutions, in terms of schools, to be able to speak on with them first in person, so that they are able to appreciate this whole idea of investing and how they can participate into it with ease.
I love the way you walked us through that process of the USSD. That was very helpful. And actually, one of the questions we're going to look at was how easy is it nowadays to open an account, a brokerage account, and also start investing in the stock market. But I think that addresses it a little.
Yeah.
Though, in terms of the young people, have you also made it much easier? Some of them don't have national IDs. I know one of the things that you require on registration is a national ID. Some of them are in school. Have you also thought about those that do not have some of these requirements? Can you help them?
Yeah, thank you. Now, when it comes to youth who are below the age, for instance, of 18, who do not have national IDs,
Yes.
they are able to open their accounts with the help of their parents, with the
Okay.
help of their guardians. Again, this basically because of the legal issues around there, just like the bank accounts. Being 18 in our laws, it means they are below the age of consent, so they may not be able to begin on their own. But with the help of the parents, they are able to open these accounts, even when they do not have a national IDs. And that's why earlier on I highlighted that we are also speaking to parents themselves to be able to help the younger people embrace the idea of investing in the stock market, not just investing, but beginning from the idea of saving, putting something aside.
Yeah.
Because if one who can't save a penny, then you can't even talk about the conversation of investing. The best conversation has to be saving. Then from there we get to a conversation, okay, besides saving, how do I multiply what I'm saving? Which opportunities exist? That's when we introduced the whole idea of the stock market, the government securities, the bonds, in terms of the bonds, in terms of treasury bills, in terms of the stocks themselves, the shares, and so on. Yeah, so basically speaking, it is quite easy because even those without the national IDs,
They
the
can still use
parents are
their
able
parents.
to help them. But of course, away from that, those who are 18 years in Uganda, chances are high that they could be having national
national
IDs.
ID.
And if they don't, I want to use this chance to mobilize the younger people to always try your best, never to take these government initiatives for granted, because you never know when you need a document like a national ID.
Yeah.
When it becomes very important, when it's the only thing standing between you and your admission into a university or into a hospital or into a business support like this one, that's when you say, man, I wish I took it earlier and participated.
Yeah, I absolutely agree. And many young people are interested in this show, and I know they have heard your voice, and we'll keep preaching this message until it sinks down to the very last person. And thank you for those initiatives, especially making it easier to access the market. That's one of the things. But another thing I want to see is you, Were, on visitation days with the flyer of USE somewhere in a corner. I remember in my days when we were still in school, which is not long ago, we would see Prudential, for example, we would see banks sitting in corners on VDs, and parents would approach with their kids and consult, and get to know, okay, how do I help my son get into this? What are the benefits? And trust me, I've seen people look back and, they started a Prudential saving account and they're doing good, And so if USE, CMA can also come together and see how they can reach out as much as possible to these young people, put those tents up there, put a small flyer, and let there be a station, a consulting desk, even if you're not providing anything, but at least information should be there. I hope that will be taken up.
Yeah, that will be taken up, and of course the beauty of it is with our current technology, once we camp there, one is able to even open their account right away without any paperwork.
Sure.
Basically paperless transactions.
Amazing.
Yeah, true.
Now back to our retail investors here. The issue of risk and volatility in the market is quite indispensable when you come to investing in the stock market. The stock market is not a bed of roses. Today it's green, tomorrow it's red. You don't have the same situation on the market every now and then. But how do retail investors, now we're not talking about the big ones who don't even mind losses, because they're already making money elsewhere. But these retail investors, Bambi, they're looking at their 25K, which I'm using here as an example, and they're saying, okay, there's a risk of investing in these companies, but of course it has to be calculated, right? And then the volatility in the market is also high sometimes. How can they be able to kind of find a balance between the risk and the potential returns? Because always, the more returns you want, the higher you have to risk, right?
Yeah, true.
So how do they find a balance so that they're not discouraged at all? Because at the end of the day, if this person loses their 25,000 and they don't even see any value for it for a year, they're going to lose their morale. So how do they balance the risk and return issue?
Okay, thank you. So every investment vehicle, it carries opportunity, it carries a potential for returns, but also it carries a potential for risk. And if anybody ever sells you an investment opportunity which carries no risk, please run.
Yes.
That's very true. But how can they balance the two? One of the strategies here can be diversification.
Okay.
For instance, diversification, if I talk about stocks as stocks or shares as shares, it can be diversification in terms of companies.
Okay.
I could be investing, say, in a company which is into media on the stock market. Then part of my investment is into a company which is into, maybe it's a telecom. Then another one is into a utilities company, maybe like a women. So basically, what does this mean? That even if a whole industry faced a challenge and its stock in the short run or long run was moving in the opposite direction, the other sector is not moving in the same direction. So you are able to hedge against the potential risk that would have come, as opposed to if you had put all your eggs in one stock, in one company on the market. So that's important. But also, away from just diversifying in terms of companies, one can also diversify in terms of financial instruments. Every time somebody talks about Uganda Securities Exchange, what some people think about is the shares. But we have more to do beyond just the shares. You can also invest in government securities for as low as 100,000 through any of our stock brokers. You're able to invest in the stock market, and they'll be able to purchase for you. You're able to invest in government securities, and they'll be able to invest for you in bonds or treasury bills direct in the auction. You're able to participate in the auction process directly, just by the virtue of that. So by that is also diversifying. So is able to hedge against potential risks, because here looking at balancing opportunity and the risk that comes with any investment opportunity. Then of course the other one is, which I cannot forget, is to try as much as possible to read about the companies. If you have the opportunity to read the companies you're investing in, if they produce financial statements, try to look at them, but alternatively try to ask the stockbroker to help you break this down. What do they actually mean to you as the Mutuwa to be able to effectively appreciate them, so that you won't just jumping into the water without evaluating whether there are crocodiles in, or not. Because some of us want to do research after we have already invested. Then others want to listen to rumors to be able to make financial decisions, as opposed to getting this information from the right people. But also, generally speaking, every time you're choosing an investment opportunity, you should be aware it carries risk and opportunity. So even anybody who is selling you into any investment opportunity, you should be able to ask them, I have seen the opportunity side. Please show me the potential risk that comes with this. He should be able to give you a full presentation in terms of the opportunities and the potential risks that come with any investment venture that you ever choose to participate in.
And I think you're really right on that, because at the end of the day, when our people are being hoodwinked into Ponzi schemes, they're being told all these rosy things. They're not told that there are possible losses, right? And there's a potential risk in every investment, and I appreciate that knowledge as well. Now, as we wind down, what would be your one message to the retail investors, or the potential retail investors watching you out there who are risk averse? They're afraid of stepping into, like you said, the water contains crocodiles. They are there, but at the end of the day, you have to walk over that if you're going to go to the other side, the promised land of generational wealth, of a very huge portfolio in the markets. What advice, what word of advice and encouragement as well would you give to the person watching you right now?
I think part of the encouragement, Anthony, would be is that those who have been in the market for some time, we have seen many investors that have gained out of investing in the stock market, in terms of whether shares, whether government securities, and so on. So in other words, if you're not investing in something which is just up there somewhere unknown, it's a proven concept with several people, except I may not be able to break their names in terms of one-on-one, but we have seen many of them. Even in the past, we have referred you some investors, we have seen investors being hosted even here on your show, sharing their success story in terms of how they started and how the journey has fared. And you'll find for many of them, they will confidently tell you one of the best thing that happened to them is for them to be able to get numbers opportunity, and they aren't planning to quit anytime soon. But the key to note is you have to begin somewhere. Begin small. I won't encourage you to go and get sell your land, sell your everything. As you diversify whatever you have been investing in, please don't stop. You can continue investing in whatever you have been investing in, but also begin to put your other leg into the capital markets, in the various financial instruments. As time goes on, you'll be able to see the value that comes with this, and yourself will be able to make a decision in terms of making some changes in your asset allocation when it comes to investment. But most importantly, start small, start today, and if you're looking for information, get it from the right people. You can check out the website of CMA in terms of the licensed firms. You can check out our website in terms of the licensed stockbrokers who will give you the legit information that you need to be able to make the financial decisions as you participate in the stock market.
Wow, Mr. John, I can't thank you enough. Pleasure is all mine. Thank you for always honoring our invite, and we look forward to more engagements.
And so it's a pleasure to come here and engage with our investors.
Amazing.
Thank you.
There you have it, ladies and gentlemen. That is Mr. John Were, is the Relations Officer at the Uganda Securities Exchange. We have been deliberating on the matters of unlocking the potential benefits of investment for retail investors. You are a retail investor out there, a potential one maybe, and you're watching us. Please make the next move before it's too late. My name is Anthony. Remember to follow us on our socials at Smart24 TV now on X, and also watch us live on YouTube. If you missed any of this, please go back to our YouTube channel. You'll be able to backtrack all the conversations. Have a good night. Bye for now.
Smart 24, driving business.